Good morning, everybody. Welcome back to Professional Insights, brought to you by the National Referral Network. And did you know, I'm going to start this out a little bit differently today. Did you know that a lot of small and medium-sized businesses don't really understand the difference between a CFO, a controller, and a CPA, and a bookkeeper? And so if that's you, stick around. We are speaking with Jon Pedersen today, a very good close friend of mine, about the differences between these. He is a seasoned CFO who has now become a fractional CFO and helping small business owners grow and succeed, scalability. But before we jump into that, hit that like and subscribe button so you get notified of these interviews. We're here every Tuesday. So without any further ado, let's bring Jon in and get this thing going.
Hey, Mike, good to see you.
Good morning, Jon. How are you, man?
Great. Happy to be here.
Awesome. Hey, so let's jump into this. We've talked about this real quick. What is the difference between a CFO, a controller, a CPA, and a bookkeeper?
Yeah, so it's interesting because I guess I've been all of these things at some point in time in my career, right? I came up through the accounting. I was accounting major in college. Went to work at Price Waterhouse. Got my CPA exactly, and then ultimately, as I grew up through through my career, ultimately transformed more into a controllership and a CFO role. So trying to break it down is that, a bookkeeper is somebody that just kind of does transactional work, right? They're smart. They understand a little bit about the accounting model. They can prepare your books and records, but they can't really necessarily make decisions, give really good insights. They're not necessarily tax experts either, but they're really just there to kind of get your books and records straight, and then you would hand those off to a CPA generally to work on taxes. When you look at CPAs, and again, most accountants at some point in time maybe had their CPA license or sat for the CPA exam like I did, but I never practiced as a CPA the way you would think about, if you go in the phone book or you drive around, you see an accountant. CPAs typically are very tax focused, right? They're there for, individuals that have complicated tax returns, businesses that have, and for small businesses and big businesses, use CPAs to do their taxes and certain accounting situations that might be difficult. But they're very, very versed in taxes, technical issues around that, and generally are not really giving you advice to run the business. They're helping you do specific things for a fee.
Okay, so Jon, let's stop right there real quick.
Yeah.
So a bookkeeper is accounts payable, accounts receivable, cash flow in, cash flow out, right? Just making sure the accounts are up to date. Because we've had conversations with other professionals. Without good books, nobody knows the value of the business.
And a great bookkeeper is, you cannot stress how important that is. And what you really need is somebody who's going to keep the bank accounts reconciled, somebody that's going to post all your transactions to the right thing, make sure your bills get paid on time, make sure things get booked to the right account. And so it's kind of it's a lower level job in the scope of all finance, but at the same time, it's critical.
And it's the foundation.
And without that foundation, nothing else works, right? And so even large companies, multi-billion-dollar companies, still have bookkeeper level people at the bottom of the hierarchy that are doing bookkeeper type work. But it's really critical that gets done properly, because without that, everything else doesn't work.
So then that information goes to the CPA, and the CPA is really to keep you out of trouble with the IRS.
Right. Most of the time, yeah. That's the way most people should think about it, for sure.
Okay. So then as I, to your point, Jon, I don't mean to make this a hierarchy from top to bottom, but in the scope of things, now let's get into, because now we're looking, every business owner should have a bookkeeper. Every business owner obviously has a tax preparer, a CPA. Not everybody, as we move up, not everybody has a controller. So as we get it, what is a controller, and then what is a CFO?
Yeah, so when businesses get to a certain size, they generally need somebody who is higher level than a bookkeeper and can help with other kind of more complicated things. For example, if you're acquiring businesses, you're going to need to deal with purchase accounting and other more complicated accounting skills that a bookkeeper isn't going to have, because bookkeepers may or may not have an accounting degree, but a controller always will. A controller also generally has at least passed the CPA exam, even if they haven't. been a CPA in particular or practiced as one, but they will be able to give some advice on tax strategy and handle some of those sorts of things because they've seen a lot more in their experience. They work with multiple businesses, and they can help kind of guide and make sure the accounting is done properly. They also have more experience. So if you're a small business that's growing and you want to move off QuickBooks to NetSuite or a bigger system or bigger infrastructure, a controller is generally going to have some more of that experience in order to help build better infrastructure and kind of understand that kind of marriage between the business side of the business and the back office side of the business, and can help build and scale that, where a bookkeeper is really kind of heads down doing transactional work and isn't really there to do that. And so if you're a business that is just kind of doing the same thing day after day after day, you may never need a controller, right? And even if your business grows, it's not a question of revenue, it's more of a question of complexity, right? If you have a complicated business, or you're buying other businesses, or you're continuing to add locations to your current business or something like that, like having a controller or a more senior level person in there to kind of keep track of all that stuff would be really, really helpful. And that, but even the controller generally isn't super deep into how the business is run. They're more there still to kind of make sure there's controls, the books and records are right, all those kind of things are here. They manage the process, they manage the outside CPAs and tax preparers, they manage the bookkeepers. And from that perspective, again, like it's kind of, as you move up the ladder in complexity and size, somebody who's got those controller level skill sets are really important. I mean, if you look at like big companies, the person that prepares the financials and all the SEC reporting for a public company is generally the controller, right? And so that person is responsible for all that. When I was controller of Warner Music Group, I signed the financials. I ran the entire accounting infrastructure top to bottom, which for a multi-billion-dollar company is a really big job. So then
where does that CFO come into play, Jon? Like if you don't always need a controller, where does that CFO come in?
Yeah, so you typically wouldn't have a CFO if you don't have a controller, because you're generally not big enough of a business to do that. Okay. So where CFOs really come in the right, and again, there's different kinds of CFOs, right? So there's CFOs that are very operational, and then there's CFOs that are very acquisitive. They've done a lot of M&A work, they've done a lot of structuring work. Or if you have a business that's very capital markets intensive, then maybe you have a CFO that has a lot of experience working with banking and financing and raising money, as an example. Or you may have a CFO that really is kind of the right hand of the CEO that's really helping, trying to figure out how to grow and drive the business. Now that CFO, the controller will report to the CFO. And the CFO is ultimately responsible for the controller and all the accounting functions underneath it. But the CFO generally isn't doing the work, right? The controller is kind of doing everything. The CFO is making sure that the accounting team is organized, the right people, the right technology, everything is in place. But the CFO is kind of more on an oversight role versus doing the work role. As an example, I used to joke with people when I ran finance at iHeartMedia. People say, "What do you do?" And I was the CFO of the radio and digital divisions, and I said, "Well, I don't really do anything, right? I organize people. I look at everything else everybody else does. I give advice to senior management. I sit on the operating committee. I help work on the budget. I help set strategy. And I make sure that we can do the things that we've kind of talked to management, right? The CFO really is a lot about helping execute the plans of the business in a way that makes sense, so the numbers roll up the way you need them to roll up in a long-term strategic plan. So
Jon, and we're friends here. So, yeah. So then should this conversation really be more about a controller? I mean, so why are there's Amplio, there's all of these companies that have fractional CFO work.
Well, right. So what happens, and again, sometimes controllers, and there's various flavors of controllers too, but a lot of controllers are very, very, very good at accounting. but they don't look forward, because controllers in accounting looks backwards most of the time, because you're trying to get it right, you're trying to close the books, you're trying to give people good data. And some controllers, like for example, if you have a financial planning and analysis team, right, FP&A, sometimes those teams report to the controller, but a lot of times they report to the CFO. And the reason for that is that the CFO is about analysis and strategy and budget versus actual and managing the business, where the controller is kind of saying, hey, listen, I'm going to make sure that I take good accounting and take care of everything that's happened properly. But they're not necessarily in charge of running that. I mean, as an example, the corporate controller at iHeartMedia was responsible for the SEC reporting and everything like that. But me, as the business unit controllers, I ran the business for the senior management, right? And the controller was doing the accounting work off to the side and was a separate entity from us. I was there to make sure that from a budget forecast perspective, running the business, helping everybody do what they needed to do, that was more important. And that's really what a CFO is meant to do. And in some cases, again, sometimes the CFOs and controllers work really closely together. Sometimes they're more siloed. It depends on the type of organization you have and how it's set up. But ultimately, it's when you look at why somebody needs a CFO, typically it's because and some of the clients that I've had so far in my fractional career, really good bookkeepers, but we're not getting any intelligence out of the business, right? Mm-hmm. There's no reporting. It's just like, well, I closed the books. Here's the QuickBooks files, or here's the Excel files with the financials in them, but there's not a whole lot of why, right?
So, Jon, before you keep going here, I think that brings up a great question. Is that when and at what stage does a small to medium-sized business need you, or when should they bring you in?
Right. Now, some businesses don't need one, right? And sometimes if the CEO or senior management is super in tune with the numbers, because sometimes CEOs came up through the finance arm. And so when you have one of those people that really can take a look at the books, understand what's happening, and is conversant with what's happening in the numbers, you might not need a CFO at all at a certain size, right? There's a point though where there's and a lot of business people don't come up through the finance organization. And therefore, when they get a bunch of QuickBooks trial balances sent to them or whatever else, they don't know what that means, or they don't have the time to look at it. And what a CFO really does is take that information and put it in a way that senior management can digest it, right? So that's what financial planning and analysis does, when the CFO is usually in charge of that. Like I said, some of the engagements I've been on have been really about, listen, these guys are smart. They close the books on time. We don't think the numbers are wrong, but we don't really understand what's happening in the business. And so why aren't we making any money? Why are we not generating the amount of cash flow we need? Where are there opportunities to run the business differently to become more profitable, right? And that's what a CFO does. We'll dig into, and I'll say, okay, I'm going to take all this kind of raw data from the accounting systems, and I'm going to go dig in and I'm going to look at it. I'm going to analyze it. I'm going to try to figure out, I'm going to go to senior management and say, for example, I did this, in a business I worked with last year, that one of the, product lines inside the company was completely unprofitable, right? And we said, is there anything we could do to make it profitable? And we spent some time looking at it, ultimately realized no, and we ended up shutting that business, part of the business, down.
Gotcha.
Right. And that was largely based on the analysis and the numbers that I put together. And that's important to be able to kind of be involved with that and then help execute that part of the business. What is it going to cost to shut this business down? What do our financials look like when that part of the business no longer exists? Yeah, and so those are questions that a bookkeeper is probably not going to be able to answer. And a controller, a lot of times even controllers are just too busy getting the work done, getting the books closed, trying to get tax filed, working on compliance issues, et cetera. And the CFO needs to have a little bit of, needs to be a little bit of an athlete and be able to kind of do a bunch of various things and have some, slack to do special projects and special sorts of analysis. And so, now when you to your other question, when you look at fractionals, right, is that when you take somebody who's got my level of experience, who's worked in multiple multi-billion-dollar companies, and then you say, oh, you're going to go do some work for some $20 million company, they can't afford me at what my rates are in the marketplace, but they can afford, 1 or 2 days a week of me, right? And because that business is smaller, it's not complicated, right? That like they don't need 40, 50 hours a week of my time to get what they need, right?
But Jon, how does a business, and this is
Yeah.
like you've got the considering, right? But so now you've got data, right? The business owner has data, they don't understand it, but there are so many businesses that aren't even getting that data and they don't even know how to turn to. So like, how does a business owner even begin to look to notice the paradigm shift that they need to make to hire a fractional CFO?
I think businesses need to be honest with themselves, right? I mean, if they're doing all the things that they're supposed to be doing and getting the results they need, then maybe they're okay, right? But I think what happens in a lot of cases is businesses will, we're winning new business, we're doing great things, we're growing, et cetera. But why am I not making any more money? Right? If I'm doing twice as much revenue as I was 3 years ago, why am I barely any more profitable? And being able to dig into that, and especially, CFOs also have, a lot of interesting kind of connections and skills. And so, sometimes like, I would go into a business or even businesses I've had full time, and I'm like, wow, you're spending this much on your phone system. That's not what those things cost, right? Or that's not what they're supposed to cost, right? And so there's a lot of things where you can do cost reduction exercises, renegotiate with vendors, et cetera, et cetera, et cetera. And somebody has to do that work and understand that. And a lot of times controllers and bookkeepers aren't really equipped to do that kind of work because they don't spend their time out there negotiating with vendors and seeing what, and so all I know is that like when I look at it is the skill sets that I have and relationships I bring to the table, I can kind of wander into any company, and even what I don't know, I have access to people that do know.
So, but they think, Jon, they think that if their CPA should be, I mean, so many business owners that we talk to, well, my CPA handles that, but they're not. And then if they go to their,
they generally wouldn't, right? Because again, the CPA generally has, they have a relationship with their tax software preparer, and they have a relationship with their landlord and their whatever, but they don't generally go out and negotiate cloud accounting services or what a phone system looks like or any supply chain sorts of things. Or they're not out there in the market doing that kind of work. They're mostly doing the transactional and compliance work that their customers hire them to do, right? And so it's not a knock on the CPA, because the CPAs do a ton of things that a CFO generally can't do because it requires very specialized knowledge. It's really a question of, you need a little bit of all of these skill sets. And if you're small enough and you get somebody who's good at a bunch of different things, you might not need that. But what happens as a business gets bigger, it's hard to find people that are really good at this transactional stuff and really understand tax stuff and really understand business, cash flow forecasting, et cetera, and strategy to help drive the business forward. And so you sometimes have to compartmentalize those a little bit in order to kind of get the best of breed.
So there's two paradigm shifts that I see here, Jon. There's one that a business owner needs to recognize that they need help, which is a whole conversation in and of itself. Then there's the paradigm shift with the CPA, because a lot of CPAs will feel threatened by someone like you thinking you're going to take their client or you're going to make them look bad. So I've had conversations with partners like you in different aspects, and they've brought cost reduction, they've brought cost savings to the client. The client just shared that with the CPA, and the CPA said, that's not real. That can't happen. Right? So how do you work with the business owner and create that paradigm shift with the CPA that you're here to help them build a team to move the business forward and not take their client?
Right. And there's, to be fair, there's two kinds of CPAs. There's CPAs that really only do tax work. And then there's some CPAs that try to do a little bit of advisory work. But I think part of the problem with that is that, you're always dealing, every time I'm walking into a situation, I'm walking into a new client, even as we speak, where they have a part-time bookkeeper. And me coming in to do this means we're going to change systems, we're going to move some things, and then the bookkeeper's like, well, what happens to me, right? And so so this happens a lot. And so part of the question is I don't know, and maybe we'll figure out a way to continue to utilize the bookkeeper or not. I mean, it's too early to tell. But I think the point is really that as companies evolve, things change, right? And
Right.
I think and even as a fractional person, I kind of came into two clients about a year ago that were both owned by the same family office that had similar issues with them, both in very different industries. And I went in and cleaned up some of the accounting. I built reporting packages for the management. I helped them solve some strategic issues. And the construction company I worked in, I helped with help stabilize everything through a change in senior leadership, and then ended up helping to hire a new controller who will ultimately be their CFO. And I'm out of both of those companies, right? And so those companies they're in better shape than when I left them. And I'm not necessarily supposed to be a permanent fixture, right? I'm there to say, let me build some processes and employ some technology and teach people how to do these things. And then ultimately, then hopefully, if it works right, then I should be able to walk away, right?
You're like the cleaner.
In a way, right? Even in my, one of my new clients, it's like my job is to build them some infrastructure. And they said, okay, well, we're going to buy some companies. I'm like, that's great. I'm going to build you some infrastructure, help you do that. And then they're like, well, do you want to come on full time? And I'm like, no. I said, what I'm going to do though is once you get big enough to do this, I will help you hire somebody full time who's the right fit and help you build out the team appropriately. And then maybe you could keep me on as an advisory capacity or put me on the board or something like that if it makes sense. But I think the key thing is that for what they want to do, paying full price on day one as they're going to go out and do a roll up of a number of different companies, they would pay way too much and get the wrong set of skills. And so being fractional and being able to get some of these things is I can get as much of this as I need for a period of time. And then ultimately you can make other decisions down the road. And in some cases you have companies that are actually running okay, but like you just need somebody to come in and say, hey, listen, I need an FP&A system installed. I need somebody who knows what good looks like to come and look at this stuff, maybe fix it. And once they fixed it, maybe do an evaluation of the accounting and finance team, see whether or not anybody needs to be upgraded or replaced. Or sometimes you have good people, they're just not trained, right? And so sometimes you just have to even train them because, when you have small companies that grow up into bigger companies, a lot of times the people that were there when it was really small might not have the education or background to be a bigger company person. And as the company evolves, it makes it difficult for them. But that doesn't mean that they're not smart or that you should just ditch them and go on hire somebody else. Sometimes it's a question of, hey, you know what? Maybe you should take a couple of night classes. Maybe we should get you some training. Maybe we should teach you how to do certain things. And by the way, I've always found that you can actually really kind of upskill a lot of people, and I think people want to do well and want to be smarter and want to have new skills. But sometimes in a smaller company, there's nowhere to go get that because the people that are around don't have those skills. And so bringing somebody in like, me or higher level people for a period of time can help, bring people up the ladder a little bit and make them more productive.
Interesting. Well, Jon, I appreciate your time. Final thoughts. What advice can you give? There was just a lot in there, right?
Yeah.
Training. Outside of those beautiful nuggets there, what other advice can you give business owners when they're kind of going down this path, managing their finances without a CFO, without a controller? What can you give them?
Yeah, I think we said this a little bit before, but you have to be honest with yourself about what you're good at and what you're not good at. And if you realize you have a hole, recognize that it's not necessarily going to cost you a fortune to go do that, because even hiring somebody like me to come in and look at your business for 5 hours a week, it might seem expensive on a per hour basis, but what you get out of it, because somebody like me, and there's lots of people out there like me, so it's not just me, but it's just somebody like me can spend 5 hours a week and give you a lot of insight really, really, really quickly. And you can kind of do this. So for, some limited engagement of, I did an engagement last summer for somebody that wanted me to look at their call center data. They just didn't. So they gave me a bunch of data and I spent, 70 or 80 hours looking at it and came back and said, hey, by the way, this is broken. This is broken. This doesn't make any sense. There's issues with your data, et cetera. And it's like, they're like, I don't, I'm the wrong guy to pay to try to help you fix it because I don't have that skill set, but I can tell you in your data what the problem is. And then I gave that data back to senior management, and they went and they made some decisions and did some things for that.
Nice.
And so for that, it was a relatively low cost endeavor for them, but it was something that they got what they needed, and they didn't have to go hire somebody full time and pay a recruiter fee and do all those other kinds of things or whatever else. They actually just got what they needed in a 60-day period, and then were able to move on and go make business decisions. And I think that's what you have to do, is that sometimes people feel we should be smart enough and be able to figure this stuff.
Right.
But I've always looked at everything as I know what I know, but even more importantly, I know what I don't know. So if I'm dealing with something I don't know, I will go hire somebody else, right? Because I don't know everything either. So, and I think that's always the thing, is that there's somebody else that's always got a different tool belt and skill set that you do. And you should always, be able to do that, because it's generally, in this economy and in this way that like everything's gone more fractional, more virtual, more remote, it's really easy to go find people. And again, even for me, it's like people come to me all the time with work, and sometimes I'm too busy, I can't do it, or I'm not the right fit. Well, I know other people that do this work too. And I say, oh, you know what? I got somebody who could really help you with that. And I think there's a lot of that out there. So I think people should feel that, their problems are solvable, and for a price that's probably cheaper than you would expect to get really high level talent.
I love it. Jon, I really appreciate you being here, man. Always good to see you. Thank you. Make sure you hit the like and subscribe button. If you have any questions, leave them in the comments. We'll get them to Jon. Let us know how we can help. Jon is for hire. That's a pitch because he's a friend of mine. But yeah, let us know how we can help. Comments. If you want future episodes, let us know. We drive kind of these conversations based off of what we hear from clients. So, Jon, thank you. Have a great day. We'll talk soon.